Hey, it's Danielle, and in today's trade review, I'm going to be talking about Palantir and the over 100% profit that I have on this butterfly. So, what did I do with this one? Well, I placed a butterfly on Palantir for a pretty good price. It was only $1.78 per contract, and currently right now it's going for $3.63. So, as you can see, making about $556 on an investment that was under $500 to begin with. So pretty good. It's 104%, 102%. It's moving around right now with the market. But essentially what I did here was I set up a butterfly where I bought the long strike at 145 and I put the short strike at 155. And then I put another strike up here equidistant at 165. So basically what it did was it just created a net where I could make money if Palantir was trading between 145 and 155. And here we have it at 148. It doesn't need to be, right at the exact target. It doesn't need to be exactly at the expiration date. It just needs to be within the net. And that is what I like to call the stacked profit zone. So I'm going to go ahead and take profits on this one. This one was a combination of multiple squeezes. We had some squeezes on the lower time frame chart, and then we also had this squeeze right here on the daily chart. And I'd say that this daily squeeze, it hasn't even fired yet. So it can definitely go higher, but taking profits after a ticker makes the new high, especially at a key area of resistance like 150. Combined with the fact that this is options expiration week, it makes sense to take it off just because if you look at this 150 strike, what you'll see is that there's a lot of volume and high open interest here. And so what can happen is that the stock can just get a little bit sticky, a little bit stuck, right underneath that level. So I'm going to go ahead and take this off. $532 or so. Now, if I wanted to leave it on one more day, I could. The biggest upside would come if Palantir traded higher by another couple dollars. So in that instance, what you can always do is you can just scale out. So in this example, I have 3 contracts. So I can sell 2 of those and that'll at least pay for my costs. And by leaving the third one on, that'll allow me the potential to have more upside, because that way, if it does trade up into the short strike at 155, then I can make another couple dollars per contract. So that is my trade review video. These trades are analyzed, discussed, posted in the Mastering the Trade Room at Simpler Trading. So if you want to come join us, click on the link below and I'll see you for the next trade.